Here is a number that I want you to hold in your mind for the entire duration of this video. The FTC's Protecting Older Consumers report found that reported fraud losses for adults 60 and older reached approximately $2.4 billion in 2024, up from $600 million in 2020. The FTC estimates that the true losses, including cases that are never reported, may be many times higher. That is not a typo. Up to $81.5 billion. Drained from the savings, the retirement accounts, and the checking accounts of older Americans. And checking accounts are a primary target, not investment accounts, not brokerage accounts. The everyday checking account where your Social Security lands, where your pension hits, where your monthly bills come out of. That is the account that criminals and costly banking mistakes are hitting hardest. And the single mistake that creates the most vulnerability, the one that opens the door to fees, to fraud, to frozen funds, and to financial complications that can take months to sort out, is something most seniors would never even think to worry about. Today on Professor Kingsley, we are going to walk through that mistake and everything connected to it in complete, plain English, so that the money you've worked your entire life to protect stays exactly where it belongs. Stay with me to the very end. Welcome to Professor Kingsley, where every single day I create videos to help seniors protect their money, understand retirement rules, avoid costly financial mistakes, and stay one step ahead of the changes that affect their benefits. If you're new here, take a second to subscribe and turn on the notification bell. Every day I share practical, easy-to-understand information that could help protect your retirement income and your financial future. Now, let's get into today's topic. Let me start by framing the central mistake clearly, because it's not a single dramatic event. It's a habit. A passive, seemingly harmless habit that millions of seniors practice every month without realizing how much risk it creates. And that habit is keeping too much money in a single, unprotected checking account with no transaction monitoring, no account alerts, no secondary protection, and no clear understanding of what protections actually apply and what protections don't. Banks are collecting record fees from account holders in 2026, and seniors on fixed incomes are disproportionately affected. The CFPB, FTC, and FDIC have all flagged the financial harm that hidden fees and overdraft charges cause older Americans. The average overdraft fee per occurrence, according to Money Rates 2026, represents a significant cost. One unexpected timing mismatch on a fixed income can trigger multiple fees in a single day if several transactions clear together. That last sentence is the reality that most seniors don't fully appreciate. You have your Social Security deposited on the second Wednesday of the month. You have automatic bill payments for utilities, insurance, and your Medicare supplement premium. You make a few purchases during the week, and then, on one day, 3 of those automatic payments process simultaneously. The balance dips below zero for a few hours before your deposit clears, and your bank charges you an overdraft fee for each of those 3 transactions. That scenario costs you potentially $60 or $90 in fees for a timing mismatch that lasted less than a business day. And it repeats month after month if you're not watching it carefully, because you never set up an alert system to see it happening in real time. The fix for this specific aspect of the problem is structural. The best banking setup for most retirees in 2026 is a no-fee checking account for monthly expenses, with overdraft protection linked either to a savings account or a line of credit, so that temporary balance dips don't trigger fees, combined with real-time transaction alerts that notify you every time a transaction clears. Money Rates 2026 reports that 91% of online checking accounts have no monthly maintenance fee, compared to only 25% of traditional branch-based accounts. That disparity alone is reason enough for many seniors to reconsider whether their current banking arrangement is serving them or extracting from them. Now let's go deeper into the fraud dimension, because this is where the stakes move from inconvenient to genuinely devastating, and where the checking account mistakes that enable fraud are both the most common and the most preventable. Between 2020 and 2024, seniors who lost over $10,000 in one of these schemes increased by 4 times, and reports of those who lost $100,000 grew 7-fold. A major reason scammers target older adults is simple. Seniors are more likely to have more money. The potential payoff for criminals can be much larger than targeting younger victims who are still building their wealth. Older adults also often manage decades of financial history, including multiple bank accounts and insurance policies, which creates more opportunities for identity theft and financial manipulation. Census data suggests 1 in 3 older adults now live alone and experience social isolation, which further increases vulnerability to financial fraud. Most of these victims weren't careless. They simply didn't realize how quickly a small banking mistake or a convincing scam could turn into a life-changing financial loss. Here's the specific scenario that plays out most frequently. A senior's checking account credentials are compromised through a phishing email, a fake bank login page, or a data breach at a third-party service that shared the same password. The thief gains access to the account. Small test transactions appear first, amounts under $20 that are unlikely to be noticed. Then, larger transfers begin, sometimes to external accounts. And because the account owner isn't checking their balance daily or receiving transaction alerts, the unauthorized transactions continue for days, sometimes weeks, before anyone notices. By the time the account owner calls the bank, hundreds or thousands of dollars may already be gone, and some of it may be gone permanently if the reporting window has passed. Under the Electronic Fund Transfer Act, implemented through Regulation E, your maximum liability for unauthorized electronic transactions is $50 if you notify your bank within 2 business days after learning of the loss. That protection is real and meaningful, but it requires that you notice the unauthorized transaction promptly. And you can only notice it promptly if you're monitoring your account actively, not reviewing your statement once a month. Now let's talk about the check fraud dimension specifically, because this is a threat that has dramatically accelerated in 2025 and 2026, and that specifically targets checking accounts in ways that most seniors aren't prepared for. 63% of financial institutions reported check fraud attempts in the prior 12 months, according to the Federal Reserve Financial Services 2026 Risk Officer Report. 32% of respondents noted an increase in counterfeit checks, while others saw jumps in check washing, 21%, and payee forgery, 18%. Account takeover fraud is emerging as a major trend. Check washing is a technique where criminals steal a physical check from your mailbox or outgoing mail, chemically remove the ink used for the payee name and dollar amount while leaving your signature intact, and rewrite the check to a different payee for a larger amount. Your signature on the bottom looks authentic because it is authentic. The rest of the check has been altered, and your checking account gets debited for a payment you never intended to make. This is not a hypothetical risk. 63% of financial institutions reported it in the past year. It is happening at scale. And the seniors most vulnerable to it are the ones who still mail paper checks for bill payments, utility bills, rent payments, insurance premiums, using the outgoing mail slot on their home mailbox, which is accessible to anyone walking by. The practical protection against check washing is threefold. First, switch paper check payments to electronic bill pay through your bank's online system wherever possible. Electronic payments don't have a physical check that can be intercepted and chemically altered. Second, if you must mail a paper check, drop it inside a post office or at a blue USPS collection box, not in your home mailbox or in a collection box where the pickup time has already passed, leaving checks sitting overnight. Third, use a permanent fiber-tipped pen, specifically a gel or ballpoint pen, to write checks, as these inks are significantly harder to chemically remove than standard ballpoint ink. And consider writing "void if altered" in the memo line of every check you mail. When it comes to online banking, adopting secure practices is essential. Create strong, unique passwords for your accounts, not the same password you use for your email, your streaming service, or anything else. Enabling two-factor authentication adds an extra layer of security, requiring you to verify your identity through multiple steps, typically a text message or an authentication app, before any login is completed from a new device. Now let's address the account access mistake that is increasingly common and that creates some of the most emotionally painful financial losses seniors experience. And that's oversharing account access with family members or trusted individuals without proper legal structure in place. The FDIC's guidance on elder financial protection specifically flags suspicious signatures on checks and relatives using credit cards or account access without proper authorization as warning signs of financial exploitation. The painful reality is that financial exploitation of older adults is most frequently perpetrated by people the senior knows and trusts: family members, caregivers, neighbors, or people who have gradually inserted themselves into the senior's financial life. Giving someone your ATM PIN verbally. Letting a family member just check your bank statements online using your login. Adding someone to your account informally without understanding what access that gives them. These are the kinds of access arrangements that start from a place of convenience or trust and that can become vectors for financial harm, either intentionally or through mismanagement. The correct legal structure for giving a trusted person access to your accounts is a durable financial power of attorney, a legal document prepared with an attorney that grants a specific person the authority to manage your finances under defined circumstances. Another option is adding someone as a joint account holder with full understanding that joint account holders have complete, immediate access to all funds. A third option is designating a trusted contact at your bank, a person the bank can notify if they observe unusual activity, without giving that person actual account access. Trusted family members or financial advisors can assist in keeping an eye on accounts while ensuring privacy and security. Let me now address something that is costing seniors significant money in 2026 that most people would never connect to their checking account. And that's the ongoing cost of invisible fees eroding a fixed income month by month. Banks are collecting record fees from account holders in 2026, and seniors on fixed incomes are disproportionately affected. Monthly maintenance fees on traditional checking accounts can run $12 to $25 per month, up to $300 per year, for accounts that offer no advantage over free alternatives at online banks or credit unions. ATM fees when using a machine outside your bank's network average $4.73 per transaction in 2026, according to Money Rates. Using the wrong ATM twice monthly costs approximately $109 per year. Paper statement fees, charged by many banks for mailing a monthly statement rather than providing it electronically, can add another $2 to $5 per month. None of these fees are dramatic on their own, but a senior paying a $15 monthly maintenance fee, a $5 paper statement fee, and using an out-of-network ATM twice a month is spending approximately $340 per year on banking fees alone. For someone on a fixed income where every dollar matters, that $340 is a prescription, a utility bill, or a month of groceries. The solution is the account review, and most seniors have never done one. Pull out your last 3 bank statements, go through every line item, identify every fee charged, and understand what it's for. Then look at what your bank offers for avoiding those fees, and compare it to what other institutions, particularly credit unions and online banks, offer for free. Many credit unions offer genuinely free checking accounts with no minimum balance requirement to members, including seniors on fixed incomes. Many online banks offer checking accounts with no monthly fee, FDIC insurance, nationwide ATM fee reimbursement, and transaction alerts, features that are frankly superior to what many traditional branch-based accounts provide at a cost. Now let's talk about the Social Security and direct deposit interaction with your checking account, because there's a specific aspect of this relationship that creates a checking account problem most seniors never anticipate. Confirm that your Social Security direct deposit goes to your primary checking account and is set up correctly. Outdated beneficiaries on POD, payable on death accounts, are a common estate planning problem that interacts with checking account management in ways most people discover only after a crisis. Here is the scenario that creates the most disruption. A senior has been banking at the same institution for 20 years. They open a second checking account, maybe for a specific purpose, maybe because a family member suggested it, maybe because they got a better deal on some feature. Their Social Security deposit is linked to the original account. They don't notice that their automatic bill payments have been set up on the new account. Or vice versa, their Social Security hits the old account, but their bills come out of the new one. The accounts fall out of sync. Bills go unpaid. The account that's receiving deposits but not sending payments accumulates a balance while the payment account overdrafts. The mess takes weeks to untangle and involves fees, late payment notices, and potentially damaged credit relationships. Streamlining accounts and automating as much as possible reduces the administrative burden and limits the number of places where errors or fraud can occur. Consolidate to 2 or 3 institutions. More accounts mean more monitoring, more passwords, and more points of failure. Set up automatic bill pay for all recurring fixed expenses. Enable transaction alerts on all accounts, every transaction, not just large ones. Store login credentials and account information in a secure location known to your financial power of attorney. Let me also address the online banking security dimension directly, because it's one where the risks are changing faster than most seniors' awareness is keeping up with. Financial institutions are seeing more fraud attempts and losses, with criminals increasingly using techniques such as impersonation, social engineering, and credential compromise. 63% of financial institutions reported check fraud attempts in the prior 12 months. Account takeover fraud is emerging as a trend, and among seniors, the most common entry point for account takeover is a phishing message, an email, text, or phone call that convincingly impersonates your bank, the SSA, or another trusted institution, and that tricks you into providing your login credentials or authorizing a transaction. The rule that protects against virtually every form of impersonation fraud is one that I want you to commit to memory right now. Your bank will never call you, email you, or text you asking for your full account number, your online banking password, your social security number, or a one-time verification code that was just sent to your phone. If someone contacts you claiming to be your bank and asking for any of these things, regardless of how official they sound, regardless of what number is showing on your caller ID, regardless of how urgent the situation seems, hang up. Then call the number on the back of your debit card or on your official bank statement to report the contact. Caller ID spoofing allows criminals to display your actual bank's phone number on your screen while calling from a completely different location. The number you see means nothing. What matters is who initiated the contact. If you didn't initiate it, treat it with maximum skepticism and verify independently by calling a number you know to be correct. Now let me give you the complete practical action plan that ties everything we've covered into steps you can take this week. Action 1. Set up real-time transaction alerts on your checking account immediately. Log into your bank's online or mobile banking system, find the Alerts section, and turn on notifications for every transaction, or at minimum, every transaction above a very low threshold like $50. You want to know when money leaves your account, not discover it 3 weeks later on a paper statement. Action 2. Review your last 3 bank statements for fees. Identify every monthly maintenance fee, paper statement fee, and ATM fee you've been charged. Then ask your bank what it would take to have those fees waived, and compare that to what a credit union or online bank with genuinely free checking offers. The $300 or more you may be spending annually on banking fees is money that should stay in your account. Action 3. Switch your bill payments to electronic autopay through your bank's bill pay system, not through individual company websites. Centralizing your payments through your bank gives you a complete single view of everything that's leaving your account and makes it far simpler to spot an unauthorized payment. Action 4. Stop mailing paper checks from your home mailbox. Take checks to a post office interior drop box. Better yet, switch paper check payments to electronic alternatives wherever possible. Check washing is occurring at scale in 2026, and the protection starts with you not putting a physical check where it can be intercepted. Action 5. Add a trusted contact to your bank account. This is a person the bank can call if they observe unusual activity, not someone with account access, but someone the institution can alert. Ask your bank about this option specifically. Action 6. Enable two-factor authentication on your online banking account today. This adds a second verification step, usually a text message to your phone, that prevents anyone from logging into your account with just your password. It's the single most effective protection against online account takeover, and it takes about 3 minutes to set up. Here is what I want you to carry away from everything we've covered today. The checking account mistake that costs seniors the most, whether through fees, fraud, timing mismatches, or compromised access, is not a single dramatic error. It's the accumulation of passive, unmonitored banking habits in an environment that has become dramatically more hostile to inattention. Banks are collecting record fees. Fraud losses have grown fourfold among seniors in 5 years. Check fraud is reported at nearly 2/3 of financial institutions, and account takeover fraud is on the rise. The checking account is your financial front door. And right now, in 2026, that door needs to be actively protected, not just assumed to be secure because it's always been fine before. You now have the information. You have the action plan. The only thing left is to do something with it. Before you close this video, please share it. Think of one senior in your life, a parent, a sibling, a neighbor, a friend from church, who checks their bank account once a month on their paper statement and has never set up a single transaction alert. Hit that share button right now and send them this video. The steps we covered today could protect them from a financial experience that takes months to recover from. 3 seconds to share. Real consequences as the result. And drop a comment below. Tell me, were you already monitoring your account with real-time alerts, or is today the day you're going to set that up? Have you ever had an unauthorized transaction on your checking account? Have you been paying monthly fees you didn't realize you were being charged? Tell me in the comments. I read every single one, and this community's experiences help shape the content I make every single week. This is Professor Kingsley. Protect your checking account today so it can keep protecting your retirement tomorrow. Thanks for watching, and I'll see you in the next video.